Welcome everyone. What I'm going to do is I'm going to do a 20-minute presentation on my favorite chart patterns, and these are chart patterns which can really have a big impact on your stock trading and of course your forex trading. What we've got here at the moment is a daily in the euro back in covering the second half of 13 and the first half or most of last year. And the thing about chart patterns is that quite often there is an underlying momentum developing in a chart, and chart patterns help you identify that momentum much more clearly. If you combine chart patterns with Fibonacci and Elliott wave, that becomes a even more powerful tool, and it really helps to I think the thing is with these three tools is that it really helps to unlock the code of trading for you. I think once you understand these elements, it really can clarify what's going on in these charts and will help your scanning, and of course will help your trading. So I mean, back in some time ago now, it must have been about 3 or 4 years ago, I had a member who had quite a big account, and we're talking about a six-figure account, and this particular member was very, very heavily engaged in one particular market, and the chart pattern of that market, they're on the long side, they're very heavily long. The chart pattern of this particular market to me screamed of a reversal pattern that was about to unfold to create a very, very big move, or potentially very big move. So I tried to sort of illustrate to this particular member, I can't tell them what to do with their account. I tried to illustrate with this member what I could see happening on this chart, what I could see building up. And this particular member unfortunately stayed in that trade until they capitulated when it was a good sort of 20-30+% of the way heading south. So and that was a lot of that analysis, a lot of that prediction that I had in that chart was to do with the chart pattern. And let's just remind ourselves why we're here. We're here to predict the markets. That's our key goal in the whole of trading, is to have the power to predict. So these three elements, particularly chart patterns, are a very, very useful technique. Sometimes I just clean all my charts of fib, support and resistance, and I just look at chart patterns. In fact, I wouldn't make a final decision about a trade unless I had done that, unless I cleaned the charts and looked at what was going on. Okay, so here we've got the Euro US dollar, and you can see immediately that we had a sell from this level here in March 2014. Okay, so we'd had, prior to that, we'd had a nice trending chart. It had bumped along some resistance levels. So you can see this is a three-wave pattern. This was helped very, very much by the daily 200 EMA. So you have the daily 200 EMA hold here. That was in September 13, November 13, and February 14. So at this particular point, this is obviously bullish. You had a big push up here. This was no doubt a fib level for a pullback. So you had two waves, three waves, three nice waves off the back of some confirmed support there. and this was so by the time you got this pullback, you got yet another wave. So if the chart is waving, that's an ABC correction wave at the top, an ABC correction. Don't worry about that for the moment. Just concentrate on what I'm going to come up, the chart pattern I'm going to show you in a minute. And these chart patterns generally just use very, very basic conventional technical analysis means. So this to me was a huge three-wave triangle up here. Three waves being a Fibonacci style of trading. So we had, just as we kept seeing the lows ball, we also kept seeing a lot of problems with the highs up here. And underneath this all, we saw this trend line building up here. Now this setup here to me is a combination of a wedge and a funnel. I think we'll just concentrate on the funnel for now. Basically, what's happening is the price is squeezed within this area here. The price is squeezed. So what you've got is, but basically you've got a reversal pattern, an ending pattern. We've had the wave count, we've had the wave correction, and it's punctuated by an increasing downward pressure at these highs. So the daily RSI is high. We had a big selling day on the 19th of March, and then on the May the 8th, we had a reversal bar that engulfed probably about a week's, 6, 7, 8, probably engulfed a good week's trading there. So you've got several things going on. You've got an ending pattern. You've got an increasing amount of red appearing on the chart. You've got high RSI. So this is ticking a lot of boxes. Let's tell you what, let's write this down. We got basically a reversal pattern. Engulfing bar, three-wave reversal. The three waves are here. 1, 2, 3. We've got a trend line underneath. And this squeeze going on. Okay, so we've got at least 4 factors. At least. If you want to simplify this, if you purely traded on RSI alone, you would be looking for a reversal up here anyway. Okay, but the fact that we had a huge sellers bar here, there's next to no pullback, and then we dropped. So the fact, what you could have looked out for is just the peak above this resistance here. The common factor, let's do common factors. Markets love to overshoot. And this is no exception. So the resistance level was 139.73. We actually touched 3 points short of the big number. The big number being 140. Markets love big numbers, and this example is 140. So they overshoot, they love big numbers, and we had a previous experience of selling at these highs. And we had all of these factors up here. I've left off high RSI. But the chart pattern itself was the squeeze. But once you get a squeeze like this, you basically just need to short any highs. Once this sort of squeeze and this funnel pattern has been executed, you just need to short any highs. Now this market here goes into doldrums. It's it's a summer period. It's very low volume. You've got some support down here, so you've got some traders just trading the basic support and resistance. But look what happens once you get the higher RSI and the fibs. Now this is normally the consolidation pattern is normally completed when you get a reversal to the fib zone. I mean, as a demonstration of how weak this is, we could only, sorry, let me enlarge this as much as I can. I would ordinarily have expected a retest of 836 up here. We didn't get that. We failed at this fib zone, and at that fib zone, I'll take that off now. You've seen it's a fib zone, but at that fib zone you had a major level of resistance here. So we had a failure. It was support from April 4th, and it was minor support here from the early part of May, but then it failed and dropped 704, dropped a couple hundred points. So it didn't drop a lot, but when it did drop, it got a little reversal bar, a little hesitant bar at that fib level, and the next day, next 2, 3, 4 days, it sells. But back to this bar here, to me the most obvious thing is the fact that we're just so close to that 140. So if you're a day trader and you see any chart, whether it's a good liquid stock or a forex pair, if it's sitting near a big fat number like 140 and the RSI is high, then just be on your guard and watch for an overshoot. And the best way of handling this is to, we've got the benefit of hindsight. We don't know it actually trickles down and accelerates, but the fact it's a fib level means that the chance of that selling, particularly once you get a red bar, is high. Okay, that is a little bit tricky from the point of view that you didn't get a decent pullback. I would have, for a swing trade, I would have been bidding on 877 or 875 there, trying to get in that. Intraday I would be short, but on a swing trade I would be bidding up there. Sorry, offering to short that, but I would have held some of my day trades over to pick off some of these lows. Let's find a better example. Also, the other aspect of this is the consolidation pattern. Let's look at, I'll find some more squeeze wedge breakdowns shortly, but let's just got another thing that is very difficult for less experienced traders to tackle, to find, and yet they are so important, is the consolidation patterns. Consolidations are very, very frequent in chart patterns. Markets move sideways something like 85% of the time. And I'll just repeat that, markets move sideways for 85% of the time. So what's happening is you get these big moves, and then you get these long periods of sideways, action. And I heard a commentator, a trader on a quite high profile brokerage commentary TV program the other day, and well, it's a few months ago, and this broker was talking about the euro when the euro was here, and this broker's more or less said, oh, it's not going anywhere, it's all sideways, I'm not touching it. And yet, to me, that's a classic bearish consolidation pattern that ultimately would lead to at least some sort of decent move, whether it's a massive leg or a few hundred points, it doesn't matter. But bear in mind, these markets are moving sideways 85% of the time. So if you get the consolidation patterns, bearish consolidation patterns are typically completed once they push to the highs and shake the weak hands out. Okay, so that's why the fibs are so important, because one of the easiest ways of detecting it when a bearish consolidation pattern is over is, first of all, when you see the thing move up to the upside, and secondly, most importantly, when you see fibs, which is why fibs, Elliott wave, as well as these patterns combined, can help you predict. But let's look at this consolidation pattern, and this was very similar. A big move down here over a period of about a week, and it spends something like 2 or 3 weeks just moving sideways. But every time you get pushed to the upside, however small, it's sold. So here it sold into that breakdown area, and here it just sells into this range, and then it eventually just capitulates. This is a typical institutional consolidation pattern. Let me just unravel the jargon there. What I'm saying is that the big money is selling a large number of contracts at these highs, while some of the retail traders might be buying the lows, thinking this is over. The institutions are selling big volumes of contracts at these highs, these key pivotal areas. So that's why it's important to, even if you're a day trader and you see these levels, you could just sell some contracts, 1 or 2 contracts, and then see if this can fall out of this box, and then just watch for a divergent pattern when this is typically over, or literally, if you've got once a market moves out of a box, it generally moves the depth of the box. So I would mark that box and then use that as a target. And it's pretty much, it overshoots that range, but if you'd use that as a target, you would have got the bulk of that range. But to be honest, by the time you get that number of red bars, you'd be, at the very least, you'd be ramping up your stop to protect your profits. Okay, so far we've looked at 2 things. We looked at a funnel pattern and a consolidation pattern. And I'm going to go over these in more detail with more examples, but I want to look through one more pattern first. And that is this. It follows on from the continuation, really. If you've got, let me just gather my thoughts on this for a moment. It's a basic support becomes resistance. It's a basic sort of floor pattern, whereby if the just follows on from the consolidation, really, just another way of looking at the consolidation pattern. There's the wave down, so we're edging our way down, and we get nice and low, we find some support, and you see a lot of profit taking. If short sellers are taking profits, they're buying their contracts back. If they're buying their contracts back, then the market sees some buying and moves to the upside. But this here was a major pivotal support level. As soon as we broke down here, it became a major resistance level. So another way of picking up this trade here, getting ready for the next leg down, is simple support and resistance, because by the time that retests that level and fails, you can do one or two things to trade that. You could literally put an order at that level there, on this line, and allow for an overshoot, or wait until you get a sell bar and then just short the day after. Okay, so that is three key ways of trading that. Let's add that to this list. Okay, so up here we talked about how to identify a reversal pattern. Here we're talking about continuation. So market moves sideways 85% of the time. Bearish. So in a bearish consolidation that's happening in that 85% of the time, short highs. Particularly res. Okay, right. Let's go on to another chart and look for other patterns. Let's look for some more. Let me look at. Let's look at what's happened to oil in recent times. We'll go through what's happened to oil. Let's take all this off. Okay, this is actually clearer. This is actually clearer. This is a classic funnel or wedge breakdown. Doesn't really matter what you call it. There's now the middle wave doesn't catch that high. So let me see, what can I do? Okay, well let's just. So here we have a wedge pattern where for this period here we overshoot. So strictly speaking, you had a reversal bar here. So I would have been looking for a big, to be absolutely honest, I would have been looking for a big move to the downside there. But it doesn't happen. They overshoot it. But what you do get is you get a reversal bar here. So on the overshoot we get a reversal bar, and then we stick in that range for, let me see, 13th of June. We're in that range, and we don't close underneath that range until the 26th of June, so we're in that range for 2 weeks. Once we close out of that range, it shorts from 106.20, and then we just get wave after wave after wave to the downside. But the crucial thing is, if you've got, let's just concentrate on this big pattern here for the moment. Let's just concentrate on the wedge. You've got a big wedge pattern, and these are very, very powerful patterns. You've got this big wedge happening here. At the point in which you break down and you get under the 55 EMA, under the 55 EMA, the common place to fade. So here you get, so even if you miss this move, just wait for you're clearly in a sell pattern, so wait for sell signals at resistance. Again, I'm not going to write another list because it just takes too long, but if you write a list of issues to do with what's happening at the price action down here, this is high probability a short here, because you've had already a decent wave to the upside. No doubt if I fib that, which I will do in a minute, that's a fib level. You've got a reversal bar. So number one, you've got a big wave down, and this is a pullback. Number two, you've got a retest of a reversal bar. Number three, you've got the 55 EMA. So you've got a massive wall of resistance here. This is a line of fire. The chances of that, if that breaks up there, then that's going to go back to the highs. But eventually, yeah, it consolidates for this 85% of the time, and eventually capitulates down here. And this is why, if trading is hard for some people, this is why trading is hard, because you've got to appreciate several factors of what is happening here and why so many institutions are not buying oil. In fact, they're probably selling their contracts. Let's fib it. I'll give you a couple of shortcuts in a minute. Let's fib this whole move here. I'll do that again because I'll get rid of some of this mess. You can see you get a, here on the 1st of July, you get a close under the previous day. It's only just holding the fib. It's a lower close. It's a series of lower closes. There's obviously a lot of weakness in that chart. So if you shorted up there at 550, you'd only need about a 60-70 point stop on a contract, and you could take it off about a week later at 99.50. See these round numbers? It comes back to what we've talked before about round numbers. So when it comes back to this high, it doesn't actually come under. We penetrate the 50% of this move, but then we penetrate it on the 23rd. On the 24th, we close back underneath it again. We'll do next Monday. We'll do a separate session on candles. But so if you combine the fibs, to be absolutely honest, one of the simplest ways of trading this is just fibs, because once you break, once we see we've got sell signals up in this range here, confirmed sell signals. We know it's an overshoot from this resistance level here. We've got divergent RSI as well, just to throw something else in. and then it's part of a wave pattern to the downside. So you've got a mini funnel here. It's the neckline here, the neck of this funnel at that point is shorter than that range there. That's how you can tell it's a funnel. If you really want to simplify your trading and go right back down to bare bones on how to trade this kind of pattern, if you see something that's struggling up here, and I talk about this in the videos, talk about this in the room sometimes, if you see an instrument that's struggling, doesn't matter what it is, oil, Google, Bank of America, whatever, just short the highs. Just get short up here. To take a high and then leave it. Particularly if you've got a reversal pattern. If you've got a reversal bar, sorry. So if you really want to, cut out all the jargon, cut out all the chart patterns, just literally wait. Just trade a rubber band. This RSI is a rubber band. It's extended, and in fact, on this occasion, it can't even get to the extreme. It's such a force pulling it back down to the mean and potentially down to the lows that it can't get it. There's such a force on it can't get to those highs. Okay, so if you want to simplify your trading, you could just trade with a rubber band. In other words, the RSI. Any questions? You're very quiet, guys. You're very quiet. Any questions? So once this shorts, we get consolidation, short the highs, capitulation. But we don't get a full capitulation until we get another consolidation. Elliott wave. 1, 2, 3. Correction. 1, 2, 3. Again, simplify it. If you've got something that's trending down, you can get short at the highs and stay short with a contract or the underlying stock, or you could try and trade the waves. Trading the waves is trickier. We could do a combination of the two. If you get used to the wave counts, and you can use RSI for this. That's extreme low RSI. So if you're short, consider taking profits or at least ramping a stop up. That's pushed up into a resistance area that we just discussed. Get short at the highs. Hang on a second, let me get rid of that. Sorry about that. Should have left the phone out of the room. Where were we? Yeah, so several boxes to tick for reasons to short up here. We'll look at the stock next. And here, RSI is high. We're seeing some divergence. I did actually do a little short, a little long on this support today, but I got stopped out for a few quid. I left it. I wasn't. Markets were very sideways today, apart from the pound anyway. So in stocks and in forex. Okay, so rubber band trade. We've got the 200 EMA up here. Divergent RSI. I said I would look to buy at 55. So I just sampled to see if this buyer's bar here on Friday could have taken this back to some of the sell zone up here, but it's not worked out. Yeah, so that's a good reason to sell at that stage. Get short, stay short. But I mean, at this point we've got a reversal pattern. We've got a reversal bar here. We've got an overshoot. And an actual trend line breakout. So we sell against, so the buyers are trying to push this through here. They're trying to get the oil going to the upside. It doesn't work. So buyer's bar, push it into 55 EMA, little overshoot. Sellers come in, the buyers try and push it up to 55 EMA, doesn't work. They drag it right back down to support, overshoot it. So some bulls love it. Bought quite a decent number of contracts to drag this up, to force the market up. This time round they take it back into resistance, but we're in a very narrow range, very narrow consolidation. This is difficult to trade. I'm not suggesting you trade this. And there were key reversal signals down here you could trade. I'm not suggesting you go in and out here. I'm suggesting that you could have gone in one trade there, got out resistance, one trade there, got out resistance, and either left it or looked at the way in which this 55, daily 55 was holding here, and then sat in it till you got to the 200. So there's one, so down here to me there's 1, 2, 2/3 trades to take that back to the 200 EMA. Right, let's do an example on a stock. Right, the stock I'm looking at is, just get my list. Stock I've traded recently was Bank of America. Let me look at BAC. Oh, sorry, I've got a contract. I haven't got enough data on there. Hang on. That's it. So you can see Elliott wave, 3-wave support. So what are the boxes this ticks? It ticked a 3-wave pattern. I've got a big box punctuated by an overshoot. So don't be put off by overshoots. It's very, very common. There's a minor overshoot here, but this stock has potentially got 18 on it. So the actual way to buy it is this. And being a good bellwether stock, this is a nice one to buy. You've got well, we know we've got trendline support, so that's one. We had a major pivot level here from the October 16. We had a big move up from that pivot level. We had a run here on the 3rd of Feb. So this is just an overshoot. Then we get a buyer's bar there, a hammer there on that support. So if you offered out at 15.35 next day, all you got to do is have a stop under 15, under 15.10 if you want. Under 15 is obviously better. and here we are at 1650. Nice easy stock, very close, nice easy stock, a nice easy stop, and then the potential for this just to eke its way up. Now this to me is it's a box as well, so the fact it's a box is another big plus. And again, don't be put off by a lot of selling. Obviously, be wary of a chart that's had a heavy dose of selling. Certainly be wary of it, but just don't be put off by it. But especially if you can get a close stop. So okay, it's not a big mover, but it's a good steady stock, not prone to gapping, big volume. So you tend to get more technicals but slower moves. So this is a good one to either you can day trade it, but this is a good stock, typical stock to swing trade. Right. Let's look at a couple of the oil support services stocks I like. Let's look at RIG. I think RIG is a good candidate for a long. It's a nice steady slow stock. It has experienced some significant selling with the weakness of oil back in the last year. So chart pattern. We had an overshoot. I'll keep repeating myself. Overshoots are common. We had we've got this. So 1440 was major support. We had a trend line coming across the highs. This is basically a wedge. This was slightly different from a funnel in that you tend to get on a wedge you buy the base. On the funnel you just have to try and short the highs, depending, or buy the lows, depending on the trend and the reversal pattern. So 1440, basic support and resistance. 1440 was a major pivot line. We overshot it on the 12th to the 16th of March. So we didn't overshoot it for very long. And here on the 18th of March, we pulled right. We had a fairly decent move right into the support zone. We played around in the apex. So if you waited until we came out of the apex, which is a safer way to trade it, so if you waited until April 2nd, April 1st, April 2nd, and then try to buy a pullback here, you've got a higher probability. The danger with coming long under here is you don't know it's a wedge breakout until it physically breaks out. So if you've got a trend line coming across the top, the safer way to trade it is to leave, just keep it on your watch list, look at it, check it every day, and check to see if the sellers took control of it and pushed it under the 1440, or if the bulls were able to hold it for 2-3 days later and then buy up here at the sort of 1480, 1495, whatever, a stop under 1380, and then here we are even today with weak oil, and it's still holding up here at 1935. So we have got a resistance level here. It is in a bit of a box. Well, I say bit of a box, it's in the box full stop. So I would try and hold out for 1750. Particularly if oil's weak at the moment, try and hold out for 1750. And see if that, in fact I'll put a because I think oil, my prediction for oil is that we'll see $65–$75 a barrel in the second half of the year, perhaps even over the summer, but towards the second half of the year, and which will mean that these oil support services, in this case a rig manufacturer, will benefit, and eventually I would look for a target of 25, potentially 25.17. Again, if you get the low, this is a consolidation pattern. It's had a wedge breakout. It's consolidating. So if you buy a dip and then just trade it to the height of the box. So this box here is 1465 to that. Let me just copy that. So if rig can get going, you could potentially take it up to this level of resistance. So again, it's a steady stock. It's got this wedge pattern breakout done and dusted. So there's obviously quite a lot of bulls following this. It's just a question of buying in weakness. Don't buy up here because they are a size high. Try and buy a pullback, and let's see if we can get rig to push up. Right, I'll do one more example, and then I will fold up for the evening. Let's look at Facebook. Facebook's on my list. I keep mentioning it. Let's look at Facebook. Right. So what can you see from this this chart pattern, guys? It's a nice big liquid stock. What can you see from this chart pattern? Just eyeball it. You don't need to get your own charts and mark it up. Just eyeball it and just shout out any potential patterns and key price behavior issues with this one. Just give you a minute. If I don't see anything, I'll just quickly mark it up. But it'd be good to see you uptrend. Yeah. So let's mark up the uptrend. I'll take it from this gap. This is a good example. We'll talk about gaps actually. Anything else? So we did have a bit of a funnel here. That is a funnel. Okay, I'll just quickly mark this up then, and let's finish up. A couple of things to note. We've got a reversal bar here, which punctuates. That's quite a nice buy zone there. We had this big push. Just when you were doing your analysis, just talk to yourself. Just read out the story. Big push to the upside here. Big push. Major support from here. Decent support from here. So yeah, big push, pull back. Big push, pull back, pull back. So 1, 2, 3 waves. So you have a nice trade from the bottom of the box here, and there was lots of support here to prove it was potentially going to work. Again, don't be too concerned about the selling, because then once we get this box formed, we get a nice buy pattern here, pushes it up, comes back to support, we get a nice push into the channel, drops back down again, finds support, throws in the hammer, pushes back up again. So long periods of consolidations, don't be put off by consolidations, they're very healthy, followed by moves. So this is a good, when you get a nice trending liquid stock, mark it up, watch it, follow it, and trade the waves if necessary. So we're in no man's land now. At the moment we're in no man's land because we're stuck between the 50 and the 200. We've been stuck between the 50 and the 200 before. So what we now need, if this is going to work, I'd want to see, ideally, a test of the 200. That would be nice. You know, summer doldrums coming up, so let's see if we can get a test of this trend line support on the 200 EMA. So if we come down to 75.80, or ideally 73, 74, I would be a buyer. So it's swooning around, it's struggling, the volumes are low at the moment, there's nothing to make it want to move, so let's just sit tight and see if we can get a nice trade out of it. We're sitting on 50% at the moment, so if we start to close above 79, that may be a good opportunity to at least try along on this one. Okay. Simple wave counts. You've got, let's see, 1, 2, 3. AB correction. Find support. So you get 1, 2, 3. AB correction. Find support. 1, 2. Okay, so it gets a deeper retrench before you get the third wave there. So it's a good technical stock. The stocks I would avoid are stocks that are prone to gaps, don't have clear leg patterns, don't have clear signals, and just generally messy. Quick word on gaps. If you get a stock that gaps up, mark the gap off and watch how it reacts around the gap range. So this closes above the gap range on the 29th. You don't get much of a pullback really. You probably need to use fibs to get in on this. Once the gap holds, I'll try and enlarge that. Yeah, you got a 50% pullback on the 15th of August. And then you get, it even closes above the 161 extension in early September. Okay, so for gaps, mark them off. I would have bid on 34.70 at this stage after the 29th. I don't get filled, so I leave it. So all I can do is fib it and then see if a fib level works. Okay, so we've gone through quite a lot. We've covered a lot of ground. So what I'm just going to chuck a whole string of charts up here and just show you nothing but chart patterns now for the remaining 3-4 minutes. Right, Dow. Oh, chart pattern's already on there, so let's just choose something else. Let me find a stock I like. Look at Tesco's. It's already marked up, so let's just use this example. Okay. The power to predict. How are you going to predict this one? Well, so So we're struggling at 387. We've had one, two, three touches of that. It's failed. Pulls back, pushes into resistance, puts in a reversal bar. So if you bid, or just in actual fact I wouldn't even bid on that one, I would just short at that level the next day. So I would short at 384. It stops really tight at 390 and closes lower. It gaps down, can't hold the gap, drops, drops, drops. Notice you get diversion and low RSI down here, so good time to take profits. It's a gap fill as well. So 326 is a gap fill. So a reversal bar, high RSI, break down, take your profits at 326, reload, let me get the other fib, sorry. Okay, closes above the fib zone, gaps down. There's your chance to get back in. On the 22nd of October, you get a reversal bar under the fib zone. Very, very powerful. Where's the chart pattern? Well, okay, so we have one chart pattern up here. Trendline wedge breakdown. We had a three-wave funnel up here. It's a sell signal, sell bar up here, short the sell signal. It's trending down. This is just a pullback. Short at 377, which is the low of this bar. The stop at 382, the high of the bar, above the high of the bar. Gaps down. Messes around, could take some profits, could ramp your stop up, one on the either or. If you're not in it, wait till you get, this is a gap fill plus a reversal bar, so the chance of this moving down again is high. Push that down. One way you could find stocks like this, and we talk about scanning techniques on one of the sessions. So I'm going to mark up a session on candles and a session on scanning techniques. One way you can find either a lot of free software, a lot of chart platforms will let you find gaps. So if you find daily gaps, mark them up. You do one or two things. Just set an alert for a retest of the gap and then trade a gap fill. That's one of the safest ways of doing it. Or what else could you do? Well, I think that's the best thing. If you particularly if it's a gap, if it's a trade a chart you're following, or something you scanned, just mark it up, set an alert, keep watching it, put it in your watch list, keep coming back to it, and just watch to see what happens on a gap fill. We had a gap fill in a Forex the other day, didn't we? Forex doesn't often gap, but if you do get a gap in Forex, then it's well worth trading. Another gap here. Right, I've gone on too long, so I will finish up now. Got a gap here. If you follow that along, you get a gap fill in February this year, and it gets to the top, it gets to resistance at 252 and then sells. The depth of this particular move was 250 to 217. Yeah, I think it was. There's been a couple recently. You don't get that many on Forex. Let me have a look. I can't remember now. There's a gap here. That's a weekend gap. Yeah, this is what I'm talking about. I'll just finish up on this. You get a gap here. Look how it goes to the top of the. Look how it goes up to resistance. It fills the gap, so it drops down. Spends a few days underneath the gap bar. But once it fills the gap, heads into resistance, and then you get the next leg down. So that high, that 165.25 on September last year, was a great place to get short and sit on that one on a contract. I'll talk more about gaps as time goes on. Any final questions? Otherwise, I'll just finish up. Okay, thanks for joining me. We're going to be looking at a very when we trade the pound tomorrow. I'll just go through a 3-level routine, the 3-part routine that we're going to do every morning from now on, and to try and increase the probability of our trades in Forex. Okay. Alright, thanks for joining me, and I will see you tomorrow if you're around. Otherwise, I will see you very soon. Thanks, guys. Bye for now.